Welcome to the third episode of InvestStream US India. I'm Pankaj.
I'm Harjeet, and today we're going to bring you a concise overview of public equity, private equity, and the venture capital industry.
So before we continue, just a standard disclaimer, nothing that we're talking about here is investment advice or should be construed as investment advice. You should talk to your tax attorney, your CPA, or your investment advisor for any sort of investment or financial advice.
Today we're going to start with the venture overview, including another upcoming IPO, Abacus blockchain company, SpaceX, Blipper, Drizzly, a sale and subscription business out of India, the much reviled angel tax. That should be fun. And finally, a quick overview of the markets.
The big news last night, Pinterest filed to go public by April. They're planning to select the underwriters by the end of January. Now, what's interesting is that in their last private fundraise, the amount was about $150 million. That was in June of 2017. And the valuation was approximately $12 billion. Going public at essentially the same valuation that they raised in their last private round doesn't sound too good, but I'm sure the investors in the last round have adequately protected themselves. And though it may not be a home run, I'm sure they'll make a decent amount of money on that IPO.
I think so, but I agree with you. Going public at a flat valuation doesn't really make sense. It looks like a great year for bankers, right? You have Uber, Lyft, Pinterest, Slack, Instacart, and a couple of companies that I've been reading about. It should be a good year for the bankers next year.
Well, let's just hope the equity markets stabilize and can support those IPOs. Another interesting deal was Abacus. They were a summer YC graduate. They raised $2 million from Justin Kan, YC, and Coinbase to help companies issue, administer, and settle tokenized securities on-chain via smart contracts. This one's interesting because here's a company that's building a real solution on blockchain that could be used by institutional clients and investors. The company's very early and a lot can change in that time, but I'm looking forward to seeing where this company goes in the next 12 to 18 months. I think it'd be really interesting. Next one is SpaceX. I'm sure some of you have heard SpaceX is planning to raise another $500 million at a $30.5 billion valuation. Some of the money, not all of it, possibly even most of the money, is going to be used to enable their satellite internet service called Starlink. Their plan is to launch 11,000 satellites into orbit to provide internet access. This could be pretty amazing for rural parts of the globe that don't have any sort of high-speed internet connections or even low-speed in many cases.
Look where we have come to. You could raise $500 million at a $30.5 billion valuation and then figure out this is our business model.
Well, yeah. Space travel in general, right? Like that's not your typical startup, right? You have people that are building stuff that's very capital intensive. You have you need rocket scientists, right? Literally, to figure a lot of this stuff out. So it's expensive building rockets and launching satellites into space, right? We had Iridium back, in the 80s that wanted to launch all these satellites and have cell phone connectivity. And, it was supported by a whole bunch of companies and eventually it went bankrupt. But I think a lot of the assets were picked up by different people. But hopefully SpaceX is going to fare a lot better. In some not so good news, Blipper, the AR startup founded in 2011, had raised about $130 million. 37 million of that was raised just in September of this year. Unfortunately, they're shutting down. Some of the rumors around suggest that they needed an emergency cash infusion, and that was blocked by Khazanah, which is the Malaysian government's investment fund, and hence they had to shut down. So,
But this company clearly had a business model. They had clients. They had a lot of funding behind it. But I'm sure they were looking at more than one company to back up on what really happened.
It's hard to say what really happened, without talking to the founders and talking to some of the investors. But, I think this is par for the course, right? In the startup world, a lot of times you'll find companies that have raised a lot of money. They have built real IP, but something goes wrong, and many times it's something to do with egos. Sometimes it's the egos of founders that the co-founders are not able to work together. In some cases, it's something between the investors and the founders. Sometimes it's cash flow. Customers aren't paying. There's a whole host of things that could go
It
wrong.
looked like they had real IP in place. Looked like the perfect acquisition target for one of his competitors.
Stuff goes south. It happens all the time.
We move on.
We do, and hopefully the founders will also be able to move on. Hopefully they'll get some downtime and recuperate from this unfortunate event, and get up and start again. Swiggy, the food delivery service out of Bangalore, just raised $1 billion at a $3.3 billion valuation. Again, led by Naspers, but the interesting addition were Chinese gaming giant Tencent and Hong Kong's Hill House Capital and Boston's Wellington Management also participated in this round.
Congratulations.
But Swiggy has figured out their business model, and they've wound up growing and raising a lot of money from very, very well-respected domestic and international investors.
Excellent.
Another YC-backed company, the bike and car rental marketplace DriveZ, is looking to raise another $60 million after having just raised $20 million in November. The bump in valuation is a considerable 4x to somewhere above $400 million. Now, however, what's even more interesting is that the company ran an ICO, an initial coin offering, and raised about $8 million back in April. At the same time, they claimed that the tokens could be used to rent a car or bike. At the time, they claimed that the tokens that were being offered in this ICO could be used to either rent a car or bike, or also to get paid for a bike or a car that you were putting on the marketplace. I don't have any details from the company, but since YC is an investor, I'm guessing the company is incorporated in Delaware. But the company targets the Indian market. They're active in 9 Indian cities, according to their website. What's also interesting is that I don't see any mention of the Ethereum tokens to pay or get paid with on the website. So, these Ethereum-based tokens that they launched, on the website, there's no mention anywhere of how to use these tokens. So I'm not sure really what's going on there.
If they're operating in India and you're offering this currency, and I think last week we spoke about Indian government don't have written rules on how to navigate or regulate this particular sector. So
yeah,
a lot of gray hair in this.
There's a lot of gray areas here. Yeah, absolutely. $8 million is not a small amount of money, but what they're going to do with it and how they're going to work with both regulators here in the U.S. if they need to. I don't know if they need to or not. And the regulators in India, that'll be interesting to see. Now, the website called rentalcoins.com does mention that people would buy the rental coins 1.0 to invest. And it clearly says on the website to invest in a fleet of cars which will be operated by DriveZ. Every ride a customer takes would be a 95 and 5% split. So the revenue would be shared between the investor and DriveZ to be paid between the 1st and 10th of each month. They also project on the website that a $5,000 investment would have a 31% IRR over 3 years, and netting the investor over $8,500 in that time frame. Now, Rental Coins 2.0 are supposed to be decentralized and will be tailored for the peer-to-peer marketplace. So I forget when they plan to release these 2.0 version of these coins, but they're looking at disseminating across a broader marketplace, which could be interesting if they are able to do so. So it'll be interesting to see how things work out for them, and in this environment where regulators are looking at very closely. So good luck. If you really want to be safe, if you're raising money through any sort of ICO, in which ICOs are essentially dead right now, but if people are raising money through an ICO, they should just register it as a security token and raise the money appropriately as if you were doing a securities fundraise.
Yes.
Right? And if you're doing it publicly, even more important.
More important, because you're dealing with
unaccredited investors in many cases. Yeah.
putting a lot of people at risk.
Other early stage deals in India. BU Salons, a salon subscription service, raised approximately $400,000 from Brand Capital, which is a part of Times Group, which is the largest media company in India, and the Rajasthan Venture Capital Fund. Think of this as kind of class pass for salons. Neighborhood salons can take excess capacity that they have available and use it for servicing subscribers to BU salons.
It's a pretty interesting idea.
Yeah.
Subscription-based model.
Yeah. And I mean, you know, it makes a lot of sense. I mean, the number of people that you see go into a salon for, you know, a haircut, a manicure, a pedicure, you know, basic other maintenance is pretty regular. I mean, I don't have to go get a haircut very frequently, but, you know, a lot of people do. And so I think it makes a lot of sense for both men and women. And a lot of these salons in India, at least the ones I've seen, neighborhood salons, they also offer other services. So some of them also have massage services, right? So you can go in and they cater to both men and women. There's separate areas for both men and women, you know. And
I like getting a haircut in India because not only you get a haircut, but also they kind of massage your head and also your eyes. It's a pretty neat way.
Yeah.
I always, I enjoy that experience.
Yeah.
It's like a Sunday must-do activity
Absolutely.
every 2 weeks. But Pankaj, you know, you lived in India, you've been in India for a long, long time. You invested in early stage companies. What I'm trying to figure out, or I'm speaking to a lot of, when I go to India, and I'm going there for quite often, is a lot of these investors, early stage companies, who are taking a gigantic risk or losing or risking their capital, not even recovering their capital when they're investing into early stage company. Can you explain to our viewers what is angel tax and why isn't Indian tax code simplified for early stage companies?
yeah, so, you know, it's a very complex problem. The Indian tax authorities have always looked at investments as a way for people to launder money. And I don't know when this happened or how it happened, but essentially they changed the tax code to prevent people from laundering money or bribes being given out. So, like, you know, for example, I'm a civil servant of some sort, you're running a business, and I come to you and I harass you for some money, and you say, look, I don't have the money to give you, but what I'll do is I'll give you a stake in my company. So when I pay dividends out, you'll get a dividend out of that. And you can deposit that right into your bank account because it's a dividend coming out of a company, right? And I'll say to you, okay, that's fine, but it's got to be at least this much, and, you know, you got to put it in my, you know, great granduncle's name, right? And so the Indian government saw that this was happening, and they put these laws into place that basically said, oh, you know, people are fudging their cap tables now and like adding people in and this and that, and they're either laundering money or they're paying off bribes to people that shouldn't be getting paid off. What's happened is those laws have stayed on the books, and the whole startup world has taken off. You are seeing startups raising professional money from professional investors, and they have been caught in that net now. So there are provisions that the government has put in place that says if you raise under 100 million rupees, so 100 million rupees is approximately, if I remember correctly, a little over $1.5 million, somewhere in that, around that range. If you raise a total of less than 100 million rupees, you are exempt from paying this tax.
Okay.
Now the tax is based, it's calculated by the internal, whatever their revenue service is called, Department of Revenue or whatever it is. They and their officers are responsible for meeting these companies and assessing what is your company worth. So they will do essentially a discounted cash flow analysis on your books, and they'll come up with a fair market valuation for your company.
And what is fair market?
Well, you know, fair market depends on your cash flows, right? And so it
doesn't take IP, trademarks, anything into consideration?
No, IP, trademarks, market goodwill, anything like that. Future potential for a market. It doesn't take anything else into account. It only takes into account your discounted cash flows. So, and most startups don't have any cash flows, right? Or very little cash flow. So what the tax authorities and Ministry of Corporate Affairs and some of these folks have done is they've gone out and they've gone to a lot of these startups. Many of them are now defunct. And they've gone to these startups and the founders and said, you know what? By our calculations and by the balance sheets and income statements that you've submitted to us, the worth of your company should be X. You raise money at X plus 10, so now you owe us tax on that plus 10. And that tax is considerable. It's a little over 30%. Ooh.
So where you have in the U.S. states encouraging companies to start companies, build businesses, hire more people, create job opportunities, I believe I would take this as like a discouraging. Don't invest into startups or start a business.
Absolutely. And I don't remember exactly when it was, but I think it was 2012, 2013. A bunch of us, we created a huge stink about the fact that companies that we're investing in are being forced to pay tax on the money that we've given them to continue running their business operations, scaling, growing, creating jobs, creating some IP, and this is in India's interest, right? To have intellectual property developed over there, to have an environment where people are taking risks and promoting entrepreneurship, creating jobs. So eventually they put some of these other rules into place, like below that 100 million rupee mark. Over the last couple of days, there have been a lot of tweets going around, myself included, about this. So the Department for Industrial Policy and Promotion, DIPP, tweeted back out that they're responsible for solving it. And they say that there's a provision in the tax code that's been in place since April that allows startups and angel investors to claim an exemption. Now, I don't know the details around this, but if there's still a limit, right, that's great. It's helpful for companies that are just starting out. But $1.5 million fundraise today is not a whole lot. Many really interesting seed companies are raising $1 million in their seed round. Series A's are generally more than $1.5 million in India. And so, but a Series A company is still a very high-risk company. There's still a lot of things to figure out. Many of them don't even have product market fit yet. They have the potential to grow into something huge, but many of them wind up failing.
We just saw in Blipper, who raised $137 million.
Exactly.
Series A, B, C, you don't know in the age of technology when you're going to become.
Exactly. So now what you're doing is you're discouraging investors that are coming in at the Series A, B, C, D, E, J, whatever that is, from continuing to write checks. Because, look, the truth is that technology startups don't have a valuation method that's based on a DCF. It's just not, right? You're betting on the future. You're betting on the fact that you are going to create a business that is going to disrupt something. You're going to fundamentally change the way things happen. And hence, we're going to give you a valuation that supports that. And also, you don't want to over-dilute an entrepreneur too early, right? The entrepreneurs still need to be incentivized to stay in the business and continue the business for a long period of time. And that period is at least 7 to 10 years. So, a lot of these things put together are sending mixed messages. And a lot of startups are incorporating overseas. They're incorporating in Singapore, Malta, Estonia, the US, of course, and other places, because they see this as a way of protecting themselves against things like the angel tax. Even if they're focusing on the Indian market, they're incorporated overseas.
So this is, funny you bring it up. I invested into a company with full disclosure. I invested into a company called VideoTap, which is into the video platform, building that infrastructure. And they actually did relocate from India to Singapore. So I know what you're trying to say.
Yeah.
So I hope the Indian government does take this and try to solve this and make it easier for more investors to invest in early stage companies, which will help entrepreneurs to build great businesses.
Yeah, I agree.
With that, we move to the public market. The Fed just raised overnight borrowing rate to 2.5, raised 25 basis points. What does that mean for you? That means your average cost of living is going up, right? So anything you go from if you're saving money, that means you're saving a little more. But if you're actually borrowing money from your credit cards, you're buying a house, or you're buying a car, that rate will go up. So stocks fell, 10-year treasury fell.
The stock market's down another 620 points today.
Thanks for making that obvious. And also, investors are closely watching the 2 and 10-year inversion, and Feds are planning to raise the rate twice in 2019. But as we've seen in 2016, they said we will only raise the rate approximately 1, but they did it 4 times. So this is not something you can hold on to them. And third interesting thing that I wanted to move to India. What is going on in the Indian markets? Look, obviously what happened in the US, we live in a global world, it's similar. The markets were down, but what's more interesting is I want to talk about the Indian ETF market. In 2008, ETFs were less than 1% of the total mutual fund industry, and today it's about 4% of the total industry.
Wow.
In the US, in equivalency and in comparison, US is about 15% of the total market. This year, the Indian ETF market grew by 20%.
Wow.
What does that tell you? That tells you more and more investors are investing, but they're smart.
Yeah.
They're looking at saying, rather than betting on one company, let's bet on maybe in the same industry, financials,
Yep.
consumer. They're investing in basket of stocks, depending on how they're using that to their benefit, right?
Yeah.
So that is actually a smart way of investing. Even index ETFs, you've seen they're very common these days, right?
So are you seeing in ETFs in India, are you seeing more and more of them getting money by institutional investors pouring money in, or retail investors
So
pouring
still,
money
I would say this is an institutional, more and more institutional investors. But I think as you've seen, ETF came to light in India in 2008, right?
Yeah.
India is a growing economy. I think people are finding it more interesting as we go. I think more and more retail investors in the coming years will buy into. But I think this is pretty much, or I'm pretty sure, as we've seen the numbers,
Just
it's
the
pretty
beginning.
dominated by institutional investors.
Got it.
Moving to another, so staying in the retail community, we just seen in terms of record numbers flowing in the retail sector in India. In terms of FDI, we've seen earlier, partially it has to do a lot with Walmart acquiring Flipkart, and now earlier last year we seen Amazon acquire stake in Stop Shopper, and then in September more. But now we've seen Amazon acquire or partially acquire stake in Future Group, which owns Big Bazaars and Nargilis. They have about 540 retail shops across India.
Yeah.
So you talk about Swiggy earlier. Is this becoming like, if Amazon is an online e-commerce platform, now they're going pretty much against for the battle against Walmart.
Well,
is this going to be food delivery to your house?
You want to be vertically integrated, right? Look at what they did here. They bought Whole Foods, right? Now you can order Whole Foods. You will have Whole Foods delivered to your house from Amazon, right? And there's no reason that they're not going to try and duplicate that strategy in other markets, India being a prime market for them, right? So I think this is definitely something that we want to keep a close eye on. Of course, there are regulatory things to be careful about in India. They can't easily acquire all of Future Bazaar. So, it's probably going to be a minority stake in the beginning. They'll work together. They'll spend some time kind of softening the government stance on some of this stuff and let, the customer benefit from it.
I'm just saying it's becoming easy and easy just to sit on your couch, watch TV, and let just everything, on a click of a button, everything comes to your house.
Yeah.
With that, we wrap it up. Thank you. I'm Harjeet. You can tweet me at Harjeet Rathore.
And I'm Pankaj. You can tweet me at PJane. Thanks for joining us.